Hello, everyone. Welcome to today's webinar. Thank you for taking some time to listen to our presentation. Please feel free to comment or submit your questions at any time during the presentation on the chat box. I will try to answer your questions right away or by email after the presentation. My name is Alvaro Rivero. I'm a legal specialist at Eltoma Corporate Services. Now, I find this particular industry very interesting, and I hope after this presentation, so will you. So today's topic is focused on the distributed ledger technology and an overview of the regulatory standpoint in different countries. For limited time reasons, we won't be able to cover every jurisdiction in detail, but I believe this presentation will provide with an overview of the current treatment of distributed ledger technology and token offerings in main jurisdictions. In today's presentation, we will cover the definitions for what we're going to talk about: DLT, distributed ledger technology, cryptography, currency tokens, or also known as payment tokens or virtual currency, utility tokens, security tokens, token offerings, and smart contracts. Please let me know if you can hear me properly, and if you have difficulties hearing me, just send your questions and I will try to answer as soon as possible. We will also be talking about the regulatory framework in the US, an overview of the regulatory framework in the EU, as much as we can, and the regulatory framework in Singapore. So let's start with the definitions. If you're not familiar with the subject, I'm going to try to use less technical terminology as possible. I'm not an IT professional myself, so I had to go over a lot of documents and articles reading about this topic to actually understand in a deeper way what DLT was all about, and I prepared this definition for anyone's understanding. So DLT is a shared network of ledgers kept and maintained by the participants of the network. One of its main characteristics is that it's a decentralized register, which, versus the current registration infrastructure of fully centralized entities that gather and administer the information, is less vulnerable to security breaches and attacks. More importantly, the information registered in the ledgers is secured through cryptography, which has made this decentralized information register more secure and efficient compared to ordinary centralized registers. All right, Zenia, thank you for your comment. I'm going to try to speak louder, and if you miss anything of the information that I'm giving out, please just send me a question on the chat box, and I will try to answer as soon as I can. Continuing with the definition of DLT, notably, DLT is not entirely a new technology. As Chris Beckman described in his statement before the U.S. Congress, DLT is an innovative way of using existing technologies such as asymmetric key encryption, cryptographic hashing, Merkle trees, and peer-to-peer networks. Being a decentralized information registry, DLT can optimize transaction costs by eliminating the middleman, time, security, and veracity of the exchange of any type of asset. Reason enough to raise the attention of different industries, especially and most significantly the financial services industry. Currently, the DLT has been most widely known for its application as the underlying technology of virtual currencies, such as Bitcoin. The DLT used in Bitcoin is programmed to be used under a permissionless or unrestricted network that allows every network participant to access and propose updates in the ledgers, validate the updates, and read the information registered in the ledgers without restriction. The financial services, however, might require a more restricted DLT network, allowing only authorized participants to access and propose updates in the ledgers, validate the updates, and read the information registered in the ledgers. In other words, a restricted or permission network that will help define governance issues and scale the risks of illicit activities. According to Andrea Pina and Wiebe Rudenberg from the European Central Bank, in coincidence with the European Securities and Markets Authority (ESMA), one of the main problems of applying DLT in the financial services sector is the double spending risk that may arise when no central authority will be in charge of validating the transactions. However, a DLT platform that operates on a consensus or permissionless network is near to impossible to be corrupted, as in order for a malicious user to lead a counterpart and the network of participants to believe that certain assets have been credited to its account, the malicious user will need to insert this false transaction on every block of the blockchain from the very beginning, which, with the extensive amount of data stored in a blockchain that is continuously being updated, makes the corruption of the information nearly impossible. The only computer with the capacity to append the DLT is a quantum computer that is currently still under development. So what is cryptography? Cryptography has been defined as an art of communication via coded messages where encryption codes are applied to secure certain information from sender to receiver, whereby the information to be sent as plain text will be encrypted applying the receiver's public key, and thereby converting to ciphertext. The receiver, in order to access the information, will need to decrypt the ciphertext using its private key, obtaining as end result the plain text originally sent. Uh, yes, I can share the link so that please with your comment I will send you the links to the presentations to your email. Thank you. Public key cryptography is a mathematical foundation for computer and information security, applying functions such as prime number exponentiation and elliptic curve multiplication. These mathematical functions are irreversible; in other words, they can be calculated in one direction only, and feasibly calculated in the opposite direction. Thereby its high level of security and reliability. Currency tokens or virtual currency. A currency token of virtual currency is a representation of value that is obtained, stored, accessed, and transacted electronically with the sole purpose of being used in. Since currency tokens are not a legal tender of any country and are not backed by any government, the value will be determined on the market value. This is the reason for the high volatility seen today. The key features of a currency token is the representation of value and the sole objective of using it for exchange of goods and/or services. These features separate virtual currencies from other types of tokens that use the same underlying technology. I'm sorry, James. I believe there is some problems with the connections. Um, I'll try to email you if you have any questions. Just let me know, and I'll try to reply. All right, great. Um, Utility tokens. A utility token is designed to provide the right to use a determined system's functionality. An excellent example of a utility token is Ether from Ethereum, a code that is used to pay for computational resources needed to run an application within the Ethereum network. Worth noting, Ethereum has created the ERC20, the standard API for tokens within smart contracts, whereby new tokens can be created on the basis of the ERC20 code on the Ethereum network. I think you will see in many of the new tokens being released that most of them are being based on the ERC20. So it's worth noting and having a look at the Ethereum website to actually have a further understanding of how the ERC20 is composed. Continuing, security tokens. Security tokens are simply put a representation of equity or a participation in the revenue stream of an organization. There are certain evaluation criteria to determine whether or not a token will be considered a security. In the US, for example, this test is known as the Howey test. Now, yeah, sure, James, you can get a recording. I'll send you the link to your email for sure. Token offerings. Token offering is a process whereby an issuer makes available to either the general public or certain qualified investors access to certain token that will have certain purpose or functionality. The classification of a certain token into one of the above categories will lead to its regulatory treatment in each specific jurisdiction. Therefore, it is extremely important to understand the purpose of the token and the regulatory implications before starting the token offering process. Smart contracts. Smart contracts are arrangements programmed on the DLT for a self-executable action on a certain transaction if a certain condition is met. These will revolutionize the future of the options financial sector and will increase the speed and security of these types of transactions. Firstly introduced in 1996 by computer scientist and cryptographer Nick Szabo, with the concept of automating many different kinds of processes and operations, especially payment and actions conditional on payment. Nick Szabo defines a smart contract as a set of promises specified in digital form, including protocols within which the parties perform on these promises. According to the Chamber of Digital Commerce, smart contracts may be applied in the management of digital identity, records, securities, trade finance, derivatives, financial data recording, mortgages, land title recording, supply chain, auto insurance, clinical trials, cancer research, among others. Sure thing, James. Have a good one as well. Now, the regulatory framework in the US, I'm pretty sure you've all heard about the Howey test. We're going to cover the Howey test as briefly. And but what you might not have known so far is what are the regulators in place. Listed on this slide is the Federal Trade Commission, the Commodity Futures Trading Commission, CFTC, the Securities and Exchange Commission, which is the most widely known for his active participation in the regulation. And today we will cover federal level regulation only. Regarding the regulatory framework in the US, was gaming transmission mainly regulated on the state level, securities and commodities are regulated on the federal level. Hence, the intervention of the regulators such as the FTC, the CFTC, and the SEC. The Federal Trade Commission, or FTC, may act upon token offerings that provide false or misleading information or omit to disclose material information in connection to that token offering, under the Federal Trade Commission Act of 1914. Moreover, on the one hand, the CFTC has remained cautious on its interaction with the industry and has advised market participants and stakeholders to remain alert on scam schemes that can jeopardize their investments. Additionally, and more importantly, it has advised that future currencies fall within the definition of commodities and will fall under the Commodity Exchange Act of 1936 and thereby are being regulated. On the other hand, the SEC has been active in this sphere. Beginning with the DAO tokens case, the SEC has clearly stated that token offerings will be subject to Howey test in order to understand if a token should or not be regarded as an investment contract, and hence regulated under securities regulations. On December 11, 2017, the SEC issued Administrative Proceeding File number 3-18304, where it reiterates the Dow Tokens report and imposes a cease and desist order on the token offering of Munchie Incorporated. The Howey test in general is based on 4 key elements. 1, an investment of money, either legal tender or it can be also assets like cryptocurrency, in a common enterprise with an expectation of profits and from the efforts of others. If a particular token offering encompasses all of these 4 elements, then it will absolutely be considered a security for securities regulations purposes. In the Dow case, the SEC determined that through the Howey test, the Dow tokens are an investment contract and as such, falling under the definition of security in accordance with Section 2A1 of the Securities Act of 1933 in Section 3810 of the Securities Exchange Act of 1934. If a token is regarding an investment contract, it shall comply with the securities regulations and register the offering with the SEC or qualify for an exception under the same regulations, as well as the registration before the Financial Industry Regulatory Authority if a broker-dealer activity exists. Additionally, advisors will also have to register before the SEC under the Investment Advisors Act of 1940. On the other hand, the New York State Department of Financial Services has issued rules on virtual currencies, the BIT license, mandatory for virtual currencies transmission, storing, holding, custody, among others. Regarding the compliance with KYC and AML regulations of the US, it's important to note that even when not having an establishment in the US, when having US citizens as users of the tokens, it's mandatory to comply with the key US legislative framework regarding KYC and AML. The Bank Secrecy Act of 1970, significantly amended by the US Patriot Act of 2001 and the Foreign Account Tax Compliance Act of 2010. This means that a separate reporting section should keep records for all the US citizens that hold tokens in a determined project and report, identify, and disclose US account holders and members or become subject to a 30% US withholding tax with respect to any payment of US source income. Regarding the tax treatment, tokens that are regulated under securities regulations will be subject to the taxation treatment on securities. On the other hand, the Internal Revenue Service, IRS, has stated that virtual currencies are regarded property and will be taxed accordingly. The capital gains tax rate for individuals, for example, that reaches from 0 to 28%. Payment received from the provision of goods and services, mainly applicable to utility tokens, shall be reported in computing the gross income under the fair market value of the token in US dollars as of the date that the token was received. Lastly, the IRS does not interpret virtual currencies as currencies, and therefore these will not be taxed on the foreign currency gain or loss in the US. Sorry, I have no idea if it's a problem of the hardware or mainly software. Sorry about that. Please just send me your questions or your comments. I'll try to answer as soon as I can. I'll give you some of the sources now for this information so you can consult by yourself. The CFTC Customer Advisory, Be Aware of Virtual Currency Pump and Dump Schemes, issued on February 15, 2018. The CFTC order, Conflict Incorporated, and DLT, among others, from September 17, 2015. The SEC report and investigation pursuant to Section 21A of the Securities Exchange Act of 1934, the Dow report. Also, you can find Howey test on SEC Howey Co. 228 US 293 of 1946. The license of New York is 23 NYCR Part 200 Virtual Currencies 2024 2015. And there is the IRS Notice 2014-21, April 14, 2014. Continuing with the European Union, certain particularities may be difficult to address generally when addressing the EU, as there are certain differences between companies' statutory requirements and regulations and obviously tax treatment. However, overall, we can identify that on an EU level, there are regulations that are needed to take into account. Interestingly, the European Securities Market Authority, ESMA, has issued a comprehensive guidance on the treatment of token offerings from the securities regulation standpoint, under which it determines that if a token is deemed to be a financial instrument and the activities of the issuer fall within the reception and transmission of orders related to the tokens, execution of those orders, placement or underwriting of placement of tokens, and operate a multilateral system for the tokens, the issuer will need to comply with the Prospectus Directive, the Alternative Investment Fund Managers Directive, the Market in Financial Instruments Directive, MiFID, and the Anti-Money Laundering Directive. You can find the report as ESMA Report Distributed Ledger Technology Applied to Securities Markets from February 7, 2017. Also, it's important to note that there are certain jurisdictions within the EU that are trying to be the leading sphere of or jurisdictions for DLT. For example, Ireland is working very hard to have the regulations in place, and also is working within a project with the Bank of Ireland to apply the blockchain technology into their operations. And they did a test already with Deloitte. I believe that it came out really well. Gibraltar issued already the blockchain license or the DLT license, which is also available. Malta created the new authority specifically for this purpose, that is supposed to be all set up during this year, and we hope to see more regulations in this regard. And Cyprus, it's been a hub for financial services industry for a long time now, and also applies specific treatment and are very straightforward in terms of their regulations or the applicable regulations for an entity that wants to be established in Cyprus and start the issuing of token offerings from Cyprus to the EU. Continue with Singapore. Regarding DLT, Singapore appears to be one of the most receptive jurisdictions towards its application and possible future regulation. A clear example is the consortium form of among banks, the R3 and the Monetary Authority of Singapore, MAS, named Project Hubin, that has the main objective of analyzing the application of DLT in the financial sector. Regarding token offerings, Singapore operates under a similar approach to the US in terms of determining whether or not the token shall be regarded as a security and thereby determining its applicable regulation. Recently, Singapore's regulator MAS has issued a specific and comprehensive guidelines regarding the regulatory treatment of token offerings. According to the MAS, if a token is considered a security, it will be regulated under the Securities and Futures Act, Chapter 289. And the Financial Advisors Act, Chapter 110. The regulator will analyze on a case-by-case basis if a token would be considered a share, a debenture, or a unit in a collective investment scheme, and if the token enters into any of these categories. The offering shall comply with the above stated regulations unless it is eligible for exemptions. The capital market and services license and specific prospective requirements are among the most important requirements under the Securities and Futures Act and the Financial Advisors Act. Trading platforms are also regulated under the Securities and Futures Act, whereby a primary platform, an advisor, or trading platform will be required to operate under a capital market license. Generally, on the taxation sphere, the Inland Revenue Authority of Singapore, IRS, has not issued any specific guidance on the tax treatment on token offerings so far. Nevertheless, it's important to note that Singapore applies a territorial principle of taxation, whereby only income sourced or deemed to be sourced in Singapore and income received in Singapore will incur an income tax in accordance with the Income Tax Act, Chapter 134, with a corporate income tax of 17%. There are, however, certain allowable deductions and exemptions from an eligible entity during the first 3 years of operation. Particularly in terms of utility tokens, goods and services tax 7% rate shall apply when the utility tokens are sold to Singapore. You can read more about this on the MAS Guide to Digital Token Offerings, November 14th, 2017. So, conclusions from the previous analysis, we can conclude that regardless of important jurisdictions for doing business have created guidance regarding how to deal with regulation. the securities regulation. The jurisdiction to establish a token offering practically plays a role in the regulatory environment. The white paper of any token offering shall be sufficiently clear in terms of the type and purpose of the to determine the applicable regulatory framework. The DLT will undoubtedly bring innovative solutions to industries, especially the financial services industry. It's also worth noting and important to note that there is in Singapore there is a regulatory sandbox license for companies that are wishing to start the process of a blockchain technology company, but cannot comply with all the requirements that are set in place for under the securities regulations. And the application process is quite straightforward. There is guidance available on the MAPS website, and the overall amount of time that this application would take is about 6 months. And we at Eltoma Corporate Services, we can definitely help you with licensing and all of the company incorporation in Singapore and in Cyprus and many other jurisdictions. Here at Eltoma Corporate Services, we aim to provide our client base with a personal, cost-effective, and efficient service. Our client base has substantially and internationally grown over the years, yet we still retain our core values of professionalism, cost efficiency, and personal service. We can help you with company incorporation and maintenance, banking and finance, bookkeeping and accounting services, tax planning, IT and web services, software for business, web and marketing services, legal services, immigration services, licenses, and further. We can also assist you with the recruitment process of your company. We have a dedicated website to offering job posts, and that is being consulted by potential candidates at all times. And particularly talking about Cyprus, we also have the project of immigration through investment, where we can help you to immigrate to Cyprus at any time through the purchase of a property or an investment. Thank you for your attention. Please leave your questions on the chat box or send us an email to info@eltoma-global.com or give us a call to any of the phone numbers on screen. Thank you again. I hope to see you in the next webinar. Have a good day.